All right. Hey, everybody doing? Welcome back, man. This is, I say, part two of Tuesday Talks. Um, so I'm back just simply just trying to prepare you for tomorrow. Tomorrow's Wednesday. And like I said before in other videos, I trade the SPX on Monday, Wednesday, Friday, and tomorrow's Wednesday. And so simply this video is just basically just preparing you and give you an understanding what is options, what is a credit spread, what is a debit spread, what's the brokerage platform I use to even execute my option trades on. And then I'm gonna definitely go in depth on how I place trades or what's my knowledge or what's my thinking at the time and what I'm thinking about while I'm looking at the chart. Just basically just going a little surface level on a lot of things. I just a little disclaimer. I'm really not selling you a product. I'm just giving you just simply this is simply a vlog of my everyday life as a trader, and then over time, as time progresses, how much this goes on and people enjoy it, then definitely I will show you more in-depth stuff. And as times go on and more videos is being posted, but um, let's get down to it. So right now I'm still screen sharing with y'all, and as you can see, this is TastyWorks, and I'm just giving you a little sneak peek of it, what how it looks and everything. Um, and like I said, I trade options. I only trade one thing, which is the S&P 500. The index of that is the XPX, as you can see right here, and that's why I use and what that's the symbol that I trade or place my trades on in options. And as you see, this is TastyWorks. Right here, you got the two numbers right here. I'm gonna go more in depth on that, and yeah, and then like I said, simply this is just a little overview of or inside look of how TastyWorks look. And TastyWorks is options and futures broker. You can trade futures on there as well. And later on in the video, I will show you or tell you where do you go to even to make an account. What do you have to do to be able to for you being able to or have the ability to trade options and futures. All right. And like I said before in other videos, if you have any questions, anything, just comment below in the comment area, and definitely I'll make a video and answer your questions as quickly and efficient as I can. All right. So, what is options? Options is my bread and butter. I love options so much. But so simply for the people that don't know what options is, and then for people that do know what options are, and I'm just gonna give you in the in the book term or the book definition. I'm gonna give you my perspective, in my opinion, or the like my true words of what options is. It's just in the simplest form. All right. So options is just it's a contract. You trade contracts and options that allows investors such as you and myself to buy or sell an underlying instrument like a security, ETF, which is like a ETF is meaning like the SPY of the S&P 500 or the Dow, the Russell, or even an index, which is the SPX of the S&P 500, which and that's the index, and that's what we trade in options, or I trade over a predetermined price over a certain period of time. All right. And in any asset, futures, forex, stocks, whatever, you got two options. Either you buy or sell. And buying and selling options is definitely done in the options market based on the contracts you trade. All right. So with contracts and options, one contract is worth $500. All right. In the S&P or the XPX. So simply, if I trade uh, even five contracts, that's $2,500 that I'm risking to make X amount of money. All right. So it goes up like that. So wherever how many contracts you are trading, times that by 500, that's how much money you are risking. All right. So in options, you definitely have two sides of, like I said, in any assets is buying and selling. All right. And buying is called debit spreads, and selling is called credit spreads. All right. I mostly do credit spreads because it's giving me more higher probability, and I'm comfortable doing credit spreads. Credit spreads are non-directional, meaning prices not have to go in the direction I need it to go for me to make money. I can be completely wrong in the direction of the price, but I can still make money. All right, and I'm gonna go back and go more in depth in that later. Just give you a little insight on what's the definition of it. Debit spreads is directional trading. Simply, uh, just the way trading is. If price is going up, I want price to keep going up. It's for me to make more money, and yeah, that's basically it. Um, and with credit spreads is like credit limit, like a credit card. So if I have a $500 credit limit, that's how much money I will make on a trade. That's my cap. That's my limit on any trade I take in credit spreads. Even if I have a $25 limit, $250 credit limit, um, I will. That's the amount of money I will make. Okay, and there's no more than that. So with credit spreads, the risk to reward ratio is flipped. So a lot of people you see on YouTube saying, oh, I'm making a 3-to-1, or I'm making a 5-to-1. I'm risking $1 to make $3. I'm making $1 to make six. So on credit spreads, it's flipped. I'm making $3 to make one. All right, I'm risking more to make a small amount. But in credit, it's just a higher probability in it, and based on your bank account size, you can make so much money off of that. It's just off of probability. And just going back to what option talks is, what the model is, high probability, high reward. And we want both of those. All right. And you want high probability in anything you do in life, and especially in trading as well. All right. And then going to debit spreads, the risk to reward ratio is back to normal. You were saying $1 to make three, or $1 to make six, and whatnot. All right. And with debit spreads, the profit is to infinity. There's no cap to your debit spreads. It's directional, so you can continue to go up. You continue to make more money. All right. So yeah, and I'm just trying to give you the insight of that and how the difference between debit and credit. All right, with the spreads. And like I said, I mostly do credit spreads. I love credit spreads. I love them. Just the probability of credit spreads. All right. So as you see, like I said, I was screen sharing with y'all. So right here, I'll just show you an overview, but now I'm about to go and show you what credit and debit really is, like, simplest terms, and how I learned it, how somebody taught me, and he gave me a grid, and it's so simple. All right, and I'm gonna show you, and this is like the gold mine. Definitely take note of this, because it just put options in the simplest terms, and understanding is a what is a what's a call, what's a put, whatever like that. All right. And just going back to what I said, all I do is credit spreads. All right. Either I sell a call or sell a put. A call is simply saying I want a line, a strike price, an underline, or above current price, telling me, and I'm telling the market to stay below that line until what, till 4 o'clock, to 90 days, whatever. All right. Now I'm gonna explain to you what expirations are, or same day expirations. Same day expirations were pretty much just 4 o'clock. That same day. That's when the expirations, or the expiration expires, and that's when I get my money at 4 o'clock. That's why I love 4 o'clock p.m. because it's the best time of the day for me, because my money comes to my bank account. All right. So, like I said, a call is simply above current price, and all I'm saying is that I want price to stay below that line until 4 o'clock to whenever. All right, that's a call. So a put is below current price. I'm saying that price needs to stay above it. Doesn't matter what my expression is; it just needs to stay above it. That's what I'm saying. That you don't have to be right. You do not have to be right to make money in credit spreads. Price can literally just drop, and you doing a put, it can drop, but if it stays above it by 4 o'clock or whatever, you still made your money. You made your credit limit. That simple as that. All right, and that's what I love about it. And for me, it's going back to my other videos when I said personality. You trade like your personality. If you're a person that is willing to be patient, wait weeks, wait days to hold a trade, whatever, keep doing it. For me, I'm patient, but only for a few hours. So that's why I trade from I clock in at 12:30. I'm done at about 3 to 4 hours. That's it. That's my patience. That's my patience, man. That's all I can do. So, like I said, then let the market make you. Adjust the market around to your personality, how you think as a person, how you deal with money, and just get adapt to it. Let this market be attached to you in your everyday life the way you are. All right. Do not change yourself to fit into this market. All right. The market is drawing you in every day. Novices, dumb money every day to take your money. So we just gotta be in the right mindset and remember that. All right. So that's debit and credit spreads. All right. So I'm about to go back to the screen sharing with y'all. I'm about to show y'all a little drawing a little bit. Okay. Don't don't judge me with my drawing. All right. All right. So so right now, all right. All right. This is my little grid. So all right. Sell is negative. Buy is positive. All right. Do a call. This is a put. All right. Calls are positive. Puts are negative. All right, we're going back to basic middle school, high school math. What's a negative times a negative, positive times a positive? To make it simple. Somebody told me, my mentor told me this. Literally, he showed me this. I was like, wow, this is all I need to know. Yeah, basically. I was like, okay. So, so what's a positive times a negative? That's a negative, so I want price to go down or stay down. Positive times a positive, price needs to go up. Negative times a negative equals a positive. I want price to go up. Negative times a positive is a negative. I want price to go down. All right. Y is debit. Ooh, I don't know. So is credit. All right. So simply, we just look down this whole aisle. This is all we do. All right. If I'm doing, like I said, a sell call or bear call, I'm saying price needs to stay below. That's why I say it's down, negative. If I'm doing a put, sell put, I'm saying prices below current price. I want price to go above. Just stay above it. That's it. All right. And then another thing I say, I do an iron condor. Iron condor is basically having um, both of those trades, like right here, and I want price to stay in between them. That's an iron condor. So if price is going in between, it's not maybe going higher, it's not going lower. You can say it's going sideways. It's consolidating, and that's basically that's what you can say. And that's all I want price to do: just continue to go sideways, stay in between, doesn't hit nothing, just stay in between my lines, my sell call, my sell put. I made money at 4 o'clock. So there's three ways to trade this: iron condor, sell call, sell put. All right. And I hope this makes sense because literally um when my mentor showed me this is all I need to know. All right. And it's higher probability in this. All right. And I just love credit spreads. As simple as that. Okay. All right. I hope that makes sense. Definitely taking note of this because this is all I do. All right. So I'm gonna go back. So I'm gonna go back to TastyWorks, right? Go back to TastyWorks. And this is what we do, and this is the how I place a trade. All right. So say we already know what credit spread is, you know what sell call is, you know what sell put is, sell call, or a call simply just stay it's above current price, I need price to stay down. Put is above current price, I need price to stay up. Doesn't matter what direction I'm going, I just need to stay above or below those lines or in between. That's all I need to the market. Okay. And the way it's not predicting. Just be clear. It's not predicting what the market is. It's predicting, but it's all with a strategy. That's all it is. I'm telling what the market should do. I need the market to do this for me to do this. I need the market to do this before I get in this trade. I need the market to do this before I even place a trade. It's all about ifs. That's what trading is. You always have backup plans A, B, C, D, E, F, G, and whatever. All right. So, like I said, we're on XPX, and this is TastyWorks. All right. So now I'm actually just going to take you to a chart. All right. Take you to a chart. All right. So as you can see, this is Trading View. Like I said before, I love Trading View because you can do so much on here. All right. As you can see right here, this gap up right here, and all of this is today's move. All right. So we're gonna find a trade basically using sell call, sell put, and iron condor. Okay. To make this to find a trade. Right. So we're gonna go hit the replay button, bar replay, and we're gonna go back in time. And we're gonna cancel this. Start from right here. All right. So basically, as you can see, it gapped up and then it fell. All right. So price hit some resistance up here or sellers in order for price to fall here and make these red candles. So here's the key to trading. Here's the key to understand the market, how it moves. If price gaps up and falls and make red candles, what does that mean? What does that tell you? What is the chart telling you? It's telling you that it hit a pack of sellers. It hit a big line of resistance. Simple as that. In order for price to go down, it has to hit sellers. In order for price to go back up, it had to hit buyers. So simply when this gap happened, in order for this gap to happen, it had to hit a pack of buyers down here in order for price to go up. Or news happened, or Trump tweeted it. So, and later in the video, I'm going to show you how fundamentals actually play a good part in it, but we do not solely depend on it. All right. But it is a key factor in how to place trades and how you can look at the charts. All right. And the way I'm looking at it, you really don't see no indicators on my chart. I don't trade. I don't have indicators, no indicators on my chart because indicators are lagging data. I'm not here to simply rely on stuff that happened in the past. I'm thinking about the future and the present. I am anticipating for what price is about to do next. The difference between a novice trader and a professional trader is the simple fact that novices trade off of reaction and professional trade off of anticipation. I'm anticipating the price to gap up and fall from it because price is getting too expensive at that point. If price, like in this instance, price gapped up, and then if I'm not about to buy up here, if I move this bar back over, hold on 1 second. If I wanted to take this bar back out, let me take this all of this off to right here. All right, guys, price gapped up. Price is getting expensive. I'm not about to buy into this price right now. That's dumb. That's literally dumb. Because price is too expensive. It's just like if you have you want this TV so bad. Price is going up. Price is going up. It's getting too expensive for me. Like it didn't. I'm not at the price. The TV is not the price I want. All right. I'm not chasing price. I'm not chasing the chart. You get what you want. All right. Do not settle for less. That's in life. That's literally in life. I know what I want. I'm gonna wait until I get it. Patience. Great things come out when you're being patient. And trading is all about patience. All right. So price just gapped up and it's getting too expensive. That means we are really. I'm waiting for price. I'm anticipating for price to fall from here because price gapped up and now we in an area of resistance now. All right. So price is falling. It's falling now. You see these red candles. Yes, it's showing resistance, showing the effect that sellers are coming into the market. All right. In order for price to come back up here, came up here, that means it was buyers down here. So something down here or right here, this is a great level of support. All right. So the price come down here, I'm buying down here. All right. Keep it simple. Buy low, sell high. All right. That's what we do every day. Gas prices. We wait for, well, in gas, really, we don't matter what price is because we need gas, you know. But if you're looking at clothing, you're looking at shoes, you're waiting for price to get out the discounted rate. You're waiting for Black Friday. You're waiting a whole year or 11 months to get price to get down 50%. Then you buying low. And then once you buy it, then next thing you know, or after New Year's, you see price go back up. Now people is selling high again. So keep the same thing is just in life, literally. All right. So we know prices hit a pack of resistance up here or a pack of sellers up here. So we are looking for a sell call simply because this is simply a pack of sellers up here. That's the reason why price is falling. And down here, this is a pack of buyers. And price is not nowhere near down here yet. So it's going to most likely continue to fall. Okay. So we can simply say we want to sell call somewhere up here. So let's look at 27,750. All right. I want to sell call or call at 27,750. All right. So every time you see me in options, my strike price is always in gold. Always in gold. All right. Just keep it simple. So I want my strike price to be at 27.75. All right. Another part of my strategy, in a way, I love to have my strike prices while I'm looking at the chart at that time. I like my strike prices to be 75 between 100 points away from current price. So prices at 26.98 and 77 points away from this one. So that's in my range. That's perfect. All right. So it's simply 75 points or 75 points or more away from current price. That's perfect. All right. So that's I have the call or the strike price where I want price to be. Now I'm gonna go to TastyWorks to simply see how we place the trade and how much money we can get off of it. All right. Let's go back to that. All right, and this is TastyWorks again. All right, so we already at the XPX, so we're gonna go to trade. All right, go to trade. I'm gonna go to here real quick. So this right here is the table or the trade table because you're gonna click table, always stay on table. All right, right here. This is the table. So you don't hear a term of me saying same day expiration. That's where I trade. I trade, like I said, XPS got three expirations: Monday, Wednesday, Friday. It expires at 4 on Monday, expires at 4 on Wednesday, expires at 4 on Friday. Tomorrow's April 8th, so this is the Wednesday expiration. So in order to place my trade, I'm gonna place my trade on that same day expiration. So we will click on April 8th, like if we was gonna do it like tomorrow. All right. No. Well, simply let's pretend that this was yeah. Let's pretend that today was today because we doing today's move. So it's simply hypothetically we say today is April 7th and we did a trade and it was just going to expire today. All right, like just going to pass. So we will go on the same day expiration. Right here we have strategy. We're doing a sell call. So we always going to keep on short, of course, because we're doing credit, and we're always going to keep it on vertical. Always keep those the same. All right. If you want to change from a call, just click on it and change it to a put, or go back to a call, just click it again. All right. Then you click go. All right. As you can see, it literally brings up your start prices, and you can just drag your legs to exactly the start price you wanted at. So we said 27.75. All right. See, we keep dragging it. So we had 27.75. Our entry is at 27.75. Our last, like I said, 27.80. All right. So, and the great thing about this, well, options is not like you need price to come to you to fill you. You don't. And options, a price fill you off of this number right here. All right. This is how much money or this is how much premium it price or the broker is paying you for that start price, which is 30 cents. So if anything you see 30 cents is really mean $30. If you see yeah, it's $30. All right. If you see $3, which is 3.00, that's $300. All right. So they give me this 30 cents for this, and I trade 200 contracts when I trade. So I'm gonna change that to 200. All right. And 200 times 30, 6 grand. Can't beat that. All right. So we are trying to make $6,000. All right. And that's how many contracts I trade on my options. All right. Let's make this realistic here. All right. So they give me 30 cents. for 200 contracts, $6,000, and boom. And always make sure it's on credit. Make sure it's on day expiration, so it can expire today. Then you click review and send. All right, it's gonna say account doesn't have the buying power available because I'm using a different account for this example. But as you can see, give us the XP sub call vertical to tomorrow, which we say we're gonna pretend that's today. 200 is telling us $6,000 for our profit, and this is how much money we are risking or buying power. Right? If we're doing 200 contracts and it times 500, how much money are we risking? $100,000. All right. So I'm making 100. I'm risking $100,000 to make $6,000 within 2 hours or so. All right, and it's probability high probability to this trading. All right, and then you will click send and review, and then once you click send and review, it's gonna go all the way to your activity, and then you'll go to working. Under working, that means your order is in work, so it's trying to fill you. Meaning, if I had a 30-cent call, and at the time price is giving me 25 cents, that means price has to get up to 30 cents, 35 cents, or above my action, the price I'm asking for, in order to fill me. If it's at 25, I'm asking for 30, it's not gonna fill me. All right, it has to get up to 30 or 35 to fill me and take all my contracts and so I can get in the trade. All right. So once it fills me, I can unclick working, and I click fill. Then it's gonna show me down fill. I'm in the trade fully with all my tons of contracts, trying to make $6,000. All right. And you got cancel if you cancel the order and whatnot. All right. And then you got positions right here where you see how much money you losing or making at that point. All right. And like I said, in options, your P&L can definitely mess you up a little bit because you can have price far away from your strike price, but it can say you in the negatives. So don't let that psych you out because it's just it's gonna over time as time decays and getting closer to 4 o'clock, it's gonna automatically just max out to your profit. All right, because there's no more buyers and sellers around that strike price anymore. So it's just gonna just balance it off. Especially you far out the money and you making and it's like 50 points away, it's almost 4 o'clock, and you definitely you got your money, it's gonna say $6,000 in your P&L. All right. So don't let your P&L with the negatives and positives mess you up. All right. So and that's simply it. And you go to position, you always want to stay on options. All right. And if you go to right here, you go to the SPX, same thing with the overview. It will show you your working field, and you got your analysis right here. It will show you a P&L up here, watch list. If you looking at other trades, like I said, activity again, you got your alerts, but I simply do my alerts on the trading view. All right. Right. But that's it. In order for me to place my trade and everything's in the order, then showing you the numbers that where you have to type, make sure it's the same day expiration, and make sure because I remember when I first started, I was trying to do it on a March 2 years ago, like on March 3rd, and I got on the expiration was March 22nd. I'm thinking my stuff is gonna expire that day. It didn't. Then I had to get out of that trade. Now I lost money. So definitely make sure it's the same day. Same day. All right. Same day. Yeah. And as you can see, your max profit is 6,000. Your max loss is 94,000. Like I said, you're risking $100,000 overall because you're doing 200 contracts. 500 times 200 is 100,000. That equals 100,000. You're making 6,000, or you're gonna lose 94,000. But you don't never take max loss. Never. Never takes max loss. I never took max loss. I lost money before, but I never took max loss. No. But that comes with the game. Anyways, all right. So, and another thing with trading is the risk management. All right. Risk management plays a big part in any trading you do, even as forex, futures, options, stocks, or whatever. All right. And you always got to be consistent and stay to yourself and to risk the same amount every time. All right. If you even the rule is to risk 1 or 2% of your initial investment every single time. The same. If I'm risking 50, I'm risking $50 every single time until I can make enough money for me to go up to $100 to risk 100 and make more money. It's all about moving that decimal point. but you gotta stay disciplined and stay consistent with the number of what you're risking, because you gotta stay consistent, and that takes the emotion out of the trade. Because I know I'm risking at $50, I know it, but I can lose $60. If I lose $50 right now, I'm good with that. As long as I place it and risk it on a trade that I know I have high probability, I have my leverage is there, and the profit is there. I can't. There's no reason why I should not press that button. There's a lot of people that are great traders out there, but they never press the button. There's a lot of people out there that can't stop pressing the button, and they're making them lose a lot of money. So you got to find that balance. And definitely, you always want to pick the best of the best. Everything. It's just like my favorite analogy. It's just like how you like your steak. I like my steak well done. I'm not going to set any steak that's medium rare, medium, whatever. I need mine black, burnt, well done. That's the only way I'm gonna eat it. So that's just as your person, as a person, you're not gonna settle for less than that. You're not. In trading, you got to do the same thing. Wait for the best steak. Wait for the best opportunity to make your strike, make your pitch, place that trade, make that any like you got to wait for the right time, right opportunity. Because when you make that right opportunity, you shouldn't be worried. You shouldn't be worrying about that trade because you know you make the best trade, the high probability. But if you lose, the market wasn't in your favor that day. It's not. All right. You can't be mad at yourself if the market was not in your favor that day, because at the end of the day, the market's here to take your money. But if you keep your risk management consistent and risking the same amount of money every time, then once you do win, it's gonna make up for all those losses and give you more. All right. For example, like I'm gonna switch it back to my job. Where is it? Where is it? And I'm gonna show you how it works. All right. So bring this down. Show you how it works. All right. So we are okay. My wins are $300. All right. My losses are $100. I'm trading this. I'm trading 10 times. All right. I lost 7 times. But I won 3 times. So 7 times one is $700. I lost $700. Ooh, that's a lot. So, and then I won three. That's $900. All right. So how much money did I make? I made $200 in profit, and I lost more than I won. You see how it works? This is the beauty of trading, literally, because I know I can go at it as many times as I want, as many times. But if I get that winner, that big run, it's gonna make up for everything I lost that day or that week and give me more. All right. But like I said in my rule book, if I lose 3 times in a row in one day, I'm done for the rest of the week. All right. Because this one, I don't revenge trade. Revenge trade is the worst thing to do ever in trading. Trying to think you can get your money back, you can do this, get that, and this and that. You're gonna give the market more money, more of your money if you keep doing that. That's a wrong mindset. Just stop. Just stop. Close your computer, close your app. Go about your day. Do something to relax your mind to get over those losses. Because every time you're going to lose. In life, you're going to lose a lot. You're going to lose a lot before you succeed. Yeah, I'd rather lose a lot now. And then when the time when I get to the top, it's like, I know I experienced a lot. I'm never going to go back to that place again. You know, you got to fail to learn. How can you learn? How can you succeed in life if you keep winning, keep winning, keep winning? Like in trading, in my opinion, God and markets will humble you real quick, real quick. You think you got it, the market will say, nope, let's get back. Yeah, you thought you had me, but I'm telling you, and you lost a lot of money. And you, in your mind, your psyche is gone. Like you just say, I'm done with this. All right, because the market will do that to you, but you just got to know that one, you're confident. One, two, your strategy is consistent. Three, you got to trust it. You got to trust it and just know If it didn't work, it just didn't work in my favor. This and that. Let's get back at it. Find another opportunity. All right. And yeah, if I lose back to back one day and I'm done for the rest of the week, it's a whole another week. It's another week next week. Another week of trading opportunities I can make up from the losses I made. But it's just a simple fact. I'm not about to give the market more of my money. They already know psychologically and mentally I'm not there because I lost. So sit my butt down and do something else. Go out, go eat, 2K, something, draw, paint, get away from this. Because at the end of the day, it's your job. It's not, for me, I don't treat this as a hobby. It's literally my job. I'm self employed. I work at, I clock in at 12:30 p.m. I wake up, use the restroom, wash my face, then I'm on the computer, 12:30. All right. And you got to treat it like that. Okay. But I just wanted to show y'all risk management and show you how it works and how it can help you and save you. Because I'm $200 in profit, but I lost way more than I won. All right. But risk to reward ratio. Okay. And like I said, in credit spreads, it's just flip, but it's high probability. High, high probability. All right. So on TastyWorks, we placed that trade at 27.75. Pretend we placed it, we got filled. All right. So let's go back to the chart and see what happened. All right. So we had 27.75. We in there for $6,000. Now let's let the chart play out. All right. As you can see, price is continuing to fall. It's going back up. All right. It's hitting that resistance again. And then continue to go back up. And it's starting to fall from it. So we keep falling. We still in good. Still in good. If it breaks this low, still all in good. Yeah, it breaks that low. We make the money for sure. All right. Higher probability. Then boom. And now prices at 27.57. That's that's over 100 points from each other now. You see what I'm saying? 100 points away from each other. And we made $6,000 off of this. All right. $6,000. 2 to 3 hours. You made a month salary in 2 hours. 2 hours. Whatever account size you have, 2,500. If you risk, you can make $100 off of this. It depends on your account size. It's all about the consistency at the point. It's not all about money. Once you gain the skill, you get comfortable. You understand the movement of the S&P 500. Money's gonna roll with it. All right. When your heart lies into the chart, the money's gonna follow consistently. But you gotta stay. You have to have the same routine, the same thinking, the same zone. You gotta be in the zone at all times when you come to these markets. All right. You slip up, the market's gonna know it. Okay. And it's as simple as that. You just gotta know you gotta know your routine. You gotta know your strategy. You gotta know how you feel that day. You just gotta know when you not the trade, when the trade. All right, when you waiting for that best opportunity. All right. So yeah. And we made money off of that. Okay. And we did a sell call. So basically I'm saying I want price to stay below this line, this golden line. Okay. And remember, I'm not showing us what the common strategy is just yet. I'm giving you like a surface level of it right now. But as you can see, I'm using terms like support and resistance, breaking this low or this pivot right here, buying area, selling area, and going with trend and whatnot. All right. And as you can see, like I said before, I do not use indicators. I do not care about lagging data. I want to know about the present. I want to anticipate what's going to happen next. If I'm anticipating it right, I'm only gonna get better from it because it's working. I'm getting instant results back, and that's what you want as a trader. You want instant results. All right, and going back to TastyWorks. TastyWorks is live. There's no simulated trading. It's all live execution. You can do this at your own risk to go live if you want to, but I highly suggest to go on Thinkorswim. If you haven't heard of TD Ameritrade, TD Ameritrade have a platform called Thinkorswim. They have simulated options trading, and if you want to If you want me to show you, I will show you. Just request it in the comments below, and I'll show you how to get the Thinkorswim. But I would suggest doing simulated trading. I did simulated trading for 6 months before I would do any live trading, just to get comfortable, with my routine, with the strategy, and understanding the market. I've been training SPX for the past 2 years. That's the only thing I've been training. So by now, I have a great relationship with the movement of it because I've seen everything. I've seen it when news came out, how it reacted, just the way it's set up, everything. You got to take these charts out on dates. You got to understand what these charts, what these charts like, what the charts don't like. Like if I'm dating a woman, I know what turns her on. I know what turns her off. I know what she like in food. I know her favorite hobbies. I know what she don't like her hair this way. How she react to that. It's the same thing with the market. You gotta have that relationship with it to understand it and make the right moves based on how they react. You have to, and you gotta take time and effort and just spending time with it. All right, and it's as simple as that. Okay. Um, yeah. And then basically how I'm reading these charts, I'm doing all technical analysis. That's all I'm doing. I'm a very technical analysis type of trader. Um, Simply hit support, hit resistance, fail, boom, 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 put right here. Okay, because it gapped up. It gapped up, made a new high, broke this high. So this is great buying area, great buying area, and that's why the price is headed into it right now. And let's see if it holds tomorrow. Okay, because high probability, I want this thing to go down and get back up. All right, that's all I want. But if it goes down and break these lows right here, I'm at high probability price is gonna retrace and go back down again. Okay, so it's all about ifs. I just gave you two what ifs. All right, and price gaps up and break these highs. I'm doing a put. If price gaps down and break these lows, I'm doing a call somewhere, another call somewhere down here. All right, tomorrow morning. All right, and that's all technical. And just reading the chart. The chart is going to tell you what it's going to do. If you just understanding and see what it's trying to do, what it's trying to tell you. The chart is like a storyline, a storyboard. All right, and that's all technical analysis. That's the beauty of reading the chart and of anticipation. All right, but on the fundamental side, I rarely do fundamentals, but only fundamentals I do is just look at news. Like right here on the S&P, you got a little news right here for the S&P, dollar holds losses, market wraps, and stuff like that. And another website I look up at is Econo Day right here. Econo Day, ECONO Day.com. Then you'll click full calendar, and this is it for the week. Like tomorrow, we got news come out. We got the FOMC minutes at 2 o'clock. I do not trade during that time because the FOMC minutes are very important. It's very important, especially for the dollar currency and pretty much the whole world, because that's when a lot of news come out, especially with dollar currency and stuff like that. And the dollar affects majority of the whole world's currencies, majority, and that definitely affects the S&P and the Dow, everything, especially what's going on with the coronavirus. And I'm wouldn't be surprised if it made some major moves tomorrow at 2 o'clock because of this news. So going back to my rules, I don't trade during this time. So, but I will have a video up tomorrow just to show you, just talking about what actually happened when that news came out. Sometimes it might not happen. It just depends. But it's still good to look at it just to see and learn what will it do, because you never know. You never know. So it's good to learn the behaviors of the S&P of anything you trade, because you want to make money. So you want to learn it. You want to learn it to the T. All right. And then on Friday, as you guys know, news. So most likely I will trade on Friday. Okay. And this is what I look at for news. Another one is forexlive.com. All right. So forexlive.com is basically for Forex, but I love it just to look at. I just love to look at the news that pops up, because Forex news actually affects the S&P or any Dow news, anything like that. Because for example, Sunday night, Trump had a a conference meeting on Sunday, and he brought up the fact about that new vaccine or that drug they're trying to use to combat the coronavirus. And he said that the drug is having strong signs that it works against the coronavirus. So right here, and this was on Sunday, as you can see, it made that news. So I'm looking like, oh man, that's some good news against the coronavirus that we haven't heard in a while. So high probability that if the S&P opens up on Monday, you might see a gap up. Higher probability you might see a gap up on Monday. All right. And it did. So if I go back to the chart, let me go back. Hold on. Go back to the chart. Let's see what happened on the day. Actually, I should go to this right here. Right here. This is April 6th. This is Monday. It gapped up, like we said. Like I said, really. It gapped up right here. This is from here to here. That was the whole day's move. It gapped up and continued to go up. All right. And I placed a trade on here too. And I did a put at 25.55. All right. So I just basically said I want price to stay above this line. And it did. And I trade 200 contracts, so it can depends how much you can do numbers on how much money I made. I did 200 contracts. The lowest I even trade on cents wise is 5 cents, so it can be $5 times 200, or it can be $10 times 200. Anything above that, now I made money. So and I just say I want price to stay above here. And looking at it, just going off of technical analysis, price gapped up, broke these highs. So this is good buying area down here, or support down here, and it's going with trend at that point. Going with trend, going up, broke these highs, boom. I'm selling. Doing the sell put right here. Easy as that. And price just continued to go up, and it was driving by the news of that drug that's going against the coronavirus. So I did put some fundamental analysis in there, and also I did my technical. But I also always depend on my technical, because if I said price is gonna gap up, I need price to break this, and it did. Got in. If I even if I didn't know anything about that drug, I just off of technical analysis. If price broke these pivot highs, I'm doing the sell put right there, because it's making new highs. It's going with trend at this point. All right, and now. And yet Trump also had that news, and that's the reason why it went up. Going off of fear and greed. The markets are driven by fear and greed. I'm making a lot of money off of people's fear of this coronavirus and this recession that's coming. And I made money off of greed and joy and happiness that people are hearing a new drug. And that's what jerked price up at that moment, right there. And it's that simple. I mean, I just know where to look. I know what I want. I know what to look for. I mean, and that's why I'm doing this vlog here, just to show you my everyday life of what I do on a consistent basis, my routine every single time I trade, to find the answers. Because these websites, the chart will tell you the answer every single time. You just need to look at it in a way you can understand it. And that only takes but repetition and effort and work at the end to this. That's the only way you'll understand it. The only way. And all I can do right now is just give you the resources, everything to put on your computer, take notes about it, because I want you to make money. And I'm not here. I don't want nothing from y'all. My life and purpose is to help people change their lives, especially during this time and with this coronavirus and this epidemic. I just want to help. I don't want nothing from you. I just want you. Y'all guys make me better, because this is something new to me. I'm doing a vlog. I've never done anything like this before, but why not spread my knowledge to help other people and take advantage of this skill of freedom, and to do anything you want. All right, make your $6,000, go to sleep. And you wake up with $6,000 in your pocket. I'm not a person to showboat. I have money, but I'm not a person to showboat, buy a new car, this and that. Like, no. Save your money, because this wondering that is bigger than me. I feel like you guys give me it's a bigger purpose why I'm I feel like there's a bigger picture outside of this, but I'm just doing God's work right now, and just going off faith and going off of just I'm not scared. Just going off of faith, like I said, and just spreading my gift of trading. All right. Um, but truly, this is how I trade. And later in the videos, I'll definitely go more on the comment strategy, everything like that, and what I'm thinking. Um, and definitely, like I said, comment below if you have any questions about it. Um, but this is simply it. Like basically what we just did, we found a trade. I show you the trade off of doing a sell put off of fundamental and technical, and we found a bear call or a sell call appear earlier just off of technical analysis. Just saying where price hit, like it just hit. This is made this long red candle. That's sellers. Its name went back to the selling area again, and fell again. Higher probability. Higher probability. The price, you see those red and green candles, it's being produced by something. Two things: sellers, buyers. That's only two things you can say. Not only two things. All right. And later on in the videos, I'll show you when it breaks lows and just give you extra confirmation, extra confidence that your trade still is going to work. All right. But over time, you'll see me when price is getting too close to my strike price, and then you'll see how I'm disciplined enough to even hold it and withstand that surge or whatever, because I'm used to it. I've been doing this for 2 years. And just coming with experience over everything. Failures definitely taught me a lot, and losses. All right. Um, yeah, and then we go back to TastyWorks. Go back to TastyWorks, and this is where you send the order, and that money's gonna come in right here on your positions, show your P&L and everything. All right, and then you'll see that's $6,000. That money that you deserve. All right, and scared money don't make no money. Just remember that. All right, but like I said, this is option talks, man, and high probability, high reward, and that's all we want. That's all we will get, and that's it. And I just hope this helped with y'all understanding what a credit spread is. If you want to recap what a credit spread is, what's a debit spread, what are the three actions we use, which is a short call, a sell call, sell put, and the iron condor. And right before I go, I'm gonna show you how to get the iron condor. You go to strategy again. It says short, always stay on short. It says iron condor, you click go. All right. You see how it has two of them, you move them where you want, and you just saying you want price to stay between those two things, those two lines, those two lines between your call and your put. It's right here. So if you want a different trade, that's all you need. And you just click reverse in, boom. That's it. And this vlog and what I'm doing is definitely, I'm gonna give you some training opportunities if you want to take these trades live or simulate it, wherever you want to say. I'm not a financial advisor, disclaimer, but I'm just here to show you some opportunities to make money, and definitely during this crisis that we're going through. Yeah, man. And like I said, you have more questions, just say in the comments. Subscribe to Option Talks with me. And then you definitely want to expect more from me, and just to change the world, change people's lives. All right. Remember, high probability, high reward. Thank you, and stay tuned in for another video coming up soon. But thank you. All right. You have a great evening.